Hi, welcome to StockCharts.com's Your Daily Five. This is Mary Ellen McGonagle, founder of MEM Investment Research. I come to you with many years of experience, both on and with Wall Street. As it relates to my approach, my 15 years at William O'Neill and Company really shaped how I look at stocks. For those not familiar, Bill O'Neill is the founder of Investors Business Daily. And the publication is all about uncovering these big winning stocks just as they take off. I've taken that approach with me with my firm, MEM Investment Research, where I do produce a top-performing bi-weekly MEM Edge report. Let's get started today. I'm sharing with you a partial headline from Bloomberg that came out this week, and in essence, it is stating that Americans have $1.7 trillion to burn in a spending binge. And I would argue not everyone has that stimulus check to burn, but certainly there is an anticipation that we will see consumer demand really pick up as the vaccine continues to get rolled out and pandemic restrictions are lifted. So with that, I will have a focus today of stocks in the retail and consumer space. But even more importantly, I am going to share with each and every name a different chart pattern so that you can really be educated and get a feel for those patterns that really can lead to a stock trading higher. First up, we are going to look at a double bottom formation. Downtrend reversals is also going to be included. And of course, my favorite base breakout formation and a gap up on volume. So let's get started. First up, we're looking at a daily price chart of Target, TGT. And I did want to point out to you that the stock did report their earnings back here in the beginning of March. The numbers were absolutely superior. However, the company did refuse to guide as far as their earnings into the rest of this year, and that really put investors off. The stock did sell off pretty significantly here. But what I'm focused on today is the action over the last 2 days, and in particular, Target has broken back above this red 50-day simple moving average, and that is your last potential area of upside resistance. The stock, should it continue above this 50-day, is more free to continue to advance. This break back above also occurred on very heavy volume, and that's quite constructive. So from here, we can take a look at some of these outside momentum indicators. We can see the RSI, that's your relative strength indicator, is trending upward and also is above that 50. And then while the MACD is negative, and by that I mean the position is below this zero level, it did post a positive downtrend reversal signal with this black line up through the red, indicating that this downtrending momentum has in fact shifted. So let's go ahead and move on. Take a look at another stock here. This is Floor and Decor, FND. A lot of people are, of course, continuing to nest and improve their surroundings at home. The stock did have a nice gap up today on an analyst Wall Street upgrade, which is constructive, but a couple of other formations I want to point out to you in the chart. First up, I'm going to take us back to earlier this month. The stock did hit a near-term low, and buyers came in on the dip so that the stock closed the day in the upper portion of its trading range, and that is your downtrend reversal day. But of course, you're going to want to need more clues that this downtrend is and has in fact reversed. So from there, we can take a look that the stock did break back above that 50. However, it has been a fairly difficult period in the market, so it did not retain that. Today's gap up, we are back above that 50, but I am going to need to see a few more days above to be longer term bullish. But we do have the positive RSI here not only heading north but above that 50. And then your MACD had this crossover signal about a week ago, and subsequent to that it is now up here above that 0 level. Let's move on, take a look at Chewy, CHWY. This, for those not familiar, is an online retailer for all things pets, products, food, and otherwise. And the stock was a real winner, certainly during the lockdown period. A lot of people did get pets, and they paid an awful lot of attention to them during lockdown. So the stock enjoyed a very robust uptrending, nice move here. However, in line with a lot of these higher multiple stocks, it did fall out of bed in mid-February, and we can see kind of a waterfall drop here. But what I'm pointing out to you is this double bottom formation where the stock hits a near-term low, has about a 1 week rally, and then pulls back again before having another upside rally attempt. The other action here with this double bottom is ideally you want that second low to be above that initial low, and we did get that. So we are still early in the turnaround phase. However, the RSI is certainly trending upward. We do need to see further upside as far as the stock breaking above this 21-day moving average at 90.4. Couple that with a positive RSI. And then the MACD is just here poised to have that black line up through the red, indicating that this downward momentum is potentially shifting, but definitely one to keep on your watch list. Next up, we have Sprouts Farmers Market, SFM, a regional healthy food supermarket. And what we can see is that the stock is poised to break out of a base. It did hit a high back here at the end of January, pulled back, and then more recently it's poised to break out at that 25.7 level. And when we talk about base breakouts, a stock, what occurs is it hits a near-term high, pulls back, and then as it breaks above that prior high, that is known as a base breakout. The company had very strong numbers. They reported them here, and the outlook is very promising for the company. We can see that the RSI is trending upward above that 50, so in positive position, and then likewise with your MACD. Last up is Restoration Hardware, RH. I do need to point out that they are due to report their earnings on Wednesday, but it did have a bullish gap up today ahead of the release of their earnings, which can be really quite constructive in the sense that the gap up occurred because analysts are upgrading their estimates. Oftentimes, analysts will not put their neck on the line, so to speak, so close to earnings, unless they did some research, dug in, and really feel strongly that the company is going to report good numbers. We can also see the RSI trending upward above that net neutral 50, likewise with your MACD up here in positive territory. Lastly, I did want to point out to you a special on my MEM Edge bi-weekly report, and I do hope you'll take advantage of this offer. 4 weeks for only $7. You can go to my website, meminvestmentresearch.com. You'll get immediate access to this week's Sunday report, and then, of course, our midweek report. And we do send out alerts as needed. Subscribers not only get in-depth information about various sectors in the broader markets, but also select buy and sell candidates complete with entry and exit points. And that's it for your Daily 5.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.